Good morning, traders. Sorry about the delay. It is Thursday, July 31st, 2014, 8:04 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions and market data is subject to change without notice. Past performance is not indicative of future results. Start out with a rundown of what has driven the overnight news potentially. Adidas warned early, which opened the European stock market lower. Adidas says that 2015 targets are no longer achievable. Adidas is a substantial component of the German DAX. German unemployment change is negative 12,000 versus negative 5,000. European companies stating that Russian sanctions are hurting revenues already. The Eurozone CPI came in at 0.4% versus 0.5%. And VW reports Q2 sales of 51 billion euros versus 52 billion expected. And then Exxon reported $2.05 versus $1.86 expected. And then just about a half hour ago, U.S. initial claims came in at 302,000 versus 300,000, continuing claims at 2.539 million versus 2.492 million, so slightly higher. Looking ahead at 8:45, actually 8:42, since this is a subscriber number, we have Chicago PMI. The expectation here is 63.0. This number has a medium importance, so you want to pay attention to it. And then at 9:30, we have EIA natural gas, 92 billion cubic feet expected. Let's look at what we did yesterday. So yesterday's hypothesis worked out early on, but was quickly changed. It was quickly confronted by sellers who took the market down through the entire day's range. Excuse me. So let's see why this is off the screen. My screen resolution is messed up. So yesterday we opened in range. The initial idea is that given the way the market, the overnight market was positioned, we expected the overnight high to be taken out early, and then expected chop around this area here between 71 and 72.75, and then the expectation is for the market to get out of value, above value at 75, and sustain prices higher to continue to take out 79.50 and to resume its trip up to new highs. Instead, it opened in range, pushed through the overnight highs expected, but then found sellers, and it just could not look back. It ended up taking out the low of the last week or so, took out the low down to a key CLV here at 56.25. It got to 56.5. This line was here pre-market yesterday. It's the key CLVN. If you remember, 53 was important in this area, and the 56.25 is the neckline of that volume. The other side is actually around 51 right here. So this is an area that we battled before in this balance zone. It did find buyers on the FOMC all the way back up to 71.50, and then it came right back down and settled right where the point of control was. So it didn't really accomplish anything on the FOMC. So the stance of the stance that this left yesterday's close in didn't give us any indication what was next, since it is in the thick of balance here. So if we look at where we finished yesterday, you'll see that it's pretty much right in the thick of balance. It did not indicate one way or another. It was unable to hold the 75, which is an important view on what the mood was. But I don't believe that it's going to push lower by far. Although there are tons of artifacts below, tons of gaps and areas that are still have not been tested by this market. So it's hard to tell at the moment. I think today does not have enough, other than PMI, does not have enough to push us in any given direction. So I'd expect another summer trade mostly. Here's the overnight session. Opens right up at in the 65 area, 65 quarter, and is unable to push any higher, is unable to tackle the closing swing high, and then and just trade sideways for the Asian session. And then the European session, as I had mentioned, causes a push lower on Adidas, VW, and a couple other things. I think Banco Espírito Santo the stock opened back up, and it's down 41.5%. It's a large component of the IBEX. So this is creating a lot of downward pressure. The overnight session pushed to 47.75, so to the other side of that CHVN, and then it tested the mid almost to the tick, 56.50. Before coming back down to the low, and is trading near the low. This is a poor low on a B-shaped long liquidation profile. This is giving us an indication that sellers are in control. Overnight inventory is short, so that given that we are in a gap zone here versus yesterday, we're trading at 51.25. Yesterday's low is 56.50. The expectation is for some profit taking to occur right before or on the open. So I would expect a push to 56.50. Again, this happens to be yesterday's low and the overnight session's mid. I expect this to be retested, but this low is not a very good low. This, if the price is down here at 47.75 or in excess, then the market would not have found it easy to come all the way back down. It's not a poor low. There's a pretty good taper on this low, but it is the overnight session, so we have to kind of keep that perspective. But there is a pretty good taper as prices go down. What does that taper mean to us? It means that as the market was advertising lower and lower prices, there was less and less participation, as opposed to continued participation at those prices, meaning consensus or acceptance of those lower prices. So in normal circumstances, this would present a normal or decent high, a decent low, and the market will move away from it. A couple things though, this is an impulsive move, and it has not been taken out. The low has not been taken out yet. So I'm willing to bet that the overnight low is more vulnerable and is likely to be taken out. Although I do expect some responsive buying on the open at some point. I think those who are holding these short positions are likely to take profits. Just, lately it's been 5 minutes before the open we see that move. But again, this impulsive move lower seems unresolved, even though the low looks decent. So it's hard to tell right now. I'm open to either side, and I'm open to some volatility with PMI, with the Chicago PMI coming out. But overall, I think there's still another leg down remaining, in my opinion, to finish this move, to actually finish the auction lower. This higher low doesn't really get the job done. Okay, looking at today with where we are here. Again, we go all the way back to the LVN zone from the June Fed, which gives us 47 down 47.75 or 48 down to 37. This is an area that's been tested quite a bit. You can see here we keep poking into it and back out, poking in and back out. This area has found buyers in the past every time it's come down here with a naked point of control at 43. With the overnight low at 47.75, it's not that far off. But this area has consistently found buyers in the past. I believe that if it breaks through and gets to the other side, this 37.75 area, then you start to look below and look for the next areas to test. I have to pull back quite a bit to see what is left to test, but there are quite a few structures underneath that continue to need to be tested. We still have not tested the 1900 level from above. That's the bigger target below. So we'll look for that over the next few days if we're not able to find buyers. To me, this action here, this type of action here, we've gotten pretty close to 2,000, just 15 points away. But this type of action here tells me that there's a more and more difficult time for buyers to keep prices up, especially with the earnings that we've been getting. We've been getting some pretty solid earnings, but this market's not able to take the value of the S&P 500 index to higher levels. And to me, this could be a combination of summer trading, but it also is a counter indication, is a sort of a divergence. The fact that we have these good economic releases like Exxon this morning, and the market's just not able to sustain higher prices. I think it's weakening, and in an auction sense, if the market cannot move higher on good news, then the only thing it's left to do is for it to advertise lower to find those buyers at lower prices. Okay. Again, headline risk is elevated. We still have the Russia situation, Gaza, Israel. So this is all playing in. I have not seen anything as far as headliners coming out to speak today. We'll see what happens. Don't forget, though, today's trade late in the day is going to be influenced by tomorrow's unemployment figures in the U.S., which are extremely important. They drive Fed policy and all other policy. So we might see a flutter in the morning. We might see some good rotations early on, and then it's likely to go pretty quiet until the close, where folks have to hedge their positions and so on using futures, or balance their books using the futures contracts that we trade. So I'll leave you with that. I want to remind you that one of the most basic things that we have to remember as I'm doing these videos is that looking at what has happened and coming up with a plan or an idea of what's likely to happen is just a way of, it's like when those surveyors come out to a property, they drive a stake in the ground, put a flag on it, and that's a known point. I'm creating a known point through these videos, and the idea behind these videos, or behind creating a hypothesis, is how then the market reacts to that hypothesis. For example, let's say that, like yesterday, with the overnight high at 74.75, I think it was, let's say that I expect the market to take out the overnight high and hold those prices and continue higher. And the market then comes in, takes out the overnight high, and immediately drops. This is a very strong indication that my plan to go higher is in jeopardy, and that a seller's in control. So having that the plan that it would move higher based on what had happened the day before, based on the auction, based on some logical uh, volume profiling, or if you use fibs or whatever, based on the expectation of what the market should do. If it does the opposite, that is a strong, it's not a failure of your plan, it's the opposite. That is a strong indication that something's wrong. If you're expecting a trend up today, but then the market opens and it, with every push lower, you see the tick, the S&P or New York Stock Exchange tick, make new lows, but then every push higher it's not able to, for example, or you see that every rotation up is 2.5 points, but every rotation down is 4-5 points. It's another indication. You have to pay attention. That's what's called market-generated data. You have to pay attention to this type of behavior and then align it with how you feel. If you feel frustrated by the market action, you need to stop and you need to think about whether you're trading what you want to see or you're trading what the market is telling you. What I'm describing to you as far as coming up with a plan and comparing the market's behavior or reaction to what you expected is you paying attention to the market. But if you intend to get long because your plan thinks that it's more likely to go up than down, and you're feeling frustration, that's an indication coming from within you. That's not market generated. That's intuitive from you that something is wrong. You're fighting the market. And I see that a lot at stage 5. I call people and I ask why they're holding on to a terrible position, and their only answer is, well, I thought it was going to go up, so I thought I would wait it out. That's not a plan. That's just gambling. So pay attention to those things. Pay attention to how you feel, why you trade. It's a strong indication of what your belief structure is and what you're resisting, and that's a good place to start. I'll leave you with that thought. Good luck today, and I'll talk to you tomorrow. Take care.